I've done almost 2,000 deals in my real estate investing career and built a $50 million rental portfolio, all using other people's money. But in doing that, I have made a ton of mistakes. So in this video, I want to go over the top 3 mistakes that I have done that have cost me the most amount of money. And the last one cost me about $1 million. We're gonna start this out at the beginning of my career with a small mistake. Then we're gonna flash forward a few years and talk about some mistakes I made in the early 2020s. And then we're gonna talk about a mistake I made most recently that cost me the most amount of money. I know a lot of people online only talk about the good of what they do and they hide and shelter all the mistakes they make. That's not what you get on this channel. So let's talk about how much I f***ed up. If someone doesn't tell you about the mistakes they've made, they're only telling you the partial truth. Because in reality, no one accomplishes anything big without making big mistakes. The more you accomplish, the more mistakes you made along the way to accomplish those big things. So let's walk through the journey of my top 3 biggest mistakes that cost me the most amount of money and anxiety and headache and sleepless nights. I don't want to relive this, but I am for you and for your benefit. So let's get rocking. Hit that like button if you appreciate it. Mistake number 1. The 3-pack. This mistake happened within my first 2 years as a real estate investor. So back in the 2015, 2016 timeframe. I was looking at buying rental properties, and at this point, I had bought about 10 rental properties and had done a flip or 2. So I consider myself pretty seasoned, which in reality is kind of a joke. But regardless, I felt like I was doing things the right way, and for the most part, I was. I got sent a 3-pack of houses. 2 of them were houses that I would normally never buy. They were in rough areas. I didn't really know anything about them except for they were in areas that I would not want to own real estate in. But, of course there's a but, they came with a really, really nice house that was a really, really good deal in an area that I knew I wanted to buy and already own rentals in, and it was a screaming deal. So the one property I knew well, knew the area well, I knew it was a home run. The other 2 properties seemed super cheap. I don't remember the price point on them. They were like 30, 35 grand each. So I thought, how much can go wrong buying those properties? And maybe I'll start to buy lower priced properties that cash a little bit more in rougher areas and have that part of my portfolio. I was just kind of taking whatever was given to me. So you can see where this is probably going. However, during the rehab process, we ended up rehabbing the rougher properties and planning to keep them as rentals, and we rehabbed the nicer property and planned to keep that one as a rental. We went to get the properties appraised on a refinance so that we could finish the BRRRR method and get our private lender's money back. Property appraised for way more than I thought it was going to appraise for. It was a really good deal. It was something like it appraised for $150,000 and we had like $100,000 into it. So just a really, really solid deal. 65, 66% loan to value. So there's plenty of equity in that deal. It was a good deal. However, the 2 properties that we bought for I think $35,000 each and put about $10,000 to $15,000 in each, both of them appraised for $35,000. They literally appraised for slightly less than we bought them. So when all the numbers trickled down, we needed to bring about $35,000 to the closing table. Lucas and I, my business partner, didn't have the money. Combined, we probably had 10, maybe 20 grand in cash, including our personal savings, which we weren't going to touch because we told our wives we wouldn't. So we were screwed. I literally texted Lucas and said, this real estate thing was fun. Let's just sell everything, get out of this, and figure out some other way to get ahead financially. Being a little bit calmer of a presence, Lucas, he told me that we'll figure this out and just relax. And I did. And we did. We ended up selling all 3 houses. We took the house that we really liked and we took the profit from that house that we wanted to keep as a rental and used that for most of the loss of the other 2 houses that we sold. We ended up selling them a little bit more than they appraised for because it was a crappy appraisal, but we still needed a little bit more money, and we ended up cross-collateralizing one of our other rental properties into a new deal and just making it all work. We ended up pretty much breaking even on the whole deal, which isn't the end of the world, but it taught me a lesson to not chase whatever comes your way. Don't buy every single property, even if it's a good deal or looks like a good deal, if it's not in your core focus and your niche. We would never and will never own properties in the area of those 2 rough properties, and that's really what sunk us. If we were able to pass on the deal, it would have saved us several months of worry and a lot of lost time, because that's what was our focus for 6 months. 5 months as opposed to trying to grow. So monetarily, it ended up working out because even though we were young and dumb and still are a little less young, but still dumb, we realized that you have to have some parameters when you're looking to get into real estate investing. And even though we screwed up, we were still able to make it work because real estate is just that powerful. There's equity plays, there's cross collateralization plays, there's new deals. You can sell something you planned on keeping as rental or vice versa. Real estate investing just allows you to have so many different levers to pull when things are thrown your way that there's usually some type of exit ramp that you can go down, but you have to fully understand all that real estate offers and be willing to go down those paths and pull those levers. Mistake number 2, the apartment gold rush. Now this is where we start to get into a little bit more monetary of mistakes, and I don't even want to tell you mistake number 3, but I'm going to here in a couple minutes. So from 2016 to 2020, I bought 3 apartment complexes, and these are the good ones. I'm getting ready to tell you about the bad ones. But during that 4-year period, I bought 3 apartment complexes. Each one of them I bought for a certain price, fixed them up slightly, raised rents, got the thing up and running, and then within 3 years was able to refinance, pay back my initial lenders, and own them outright. So I had a 3-for-3 record when it came to successfully burring apartment complexes. Then 2021 and 2022 came along, which was an apartment complex gold rush. Everyone was getting into the small to mid-sized apartment complexes because it made sense. Rents had gone up very rapidly over the last few years. Interest rates were still pretty low and things were affordable and lots of things penciled out on paper. So we ended up buying in that 12-15 month time period 3 apartment complexes. And these weren't the $1 million apartment complexes that I had bought previously. These were a $5 million apartment complex, a $3.5 million apartment complex, and a $4 million apartment complex. So we spent well north of $10 million on 3 apartment complexes that were nice. My other apartment complexes were C+, B- types of assets and areas, and these last 3 that we bought, they were A-class apartment complexes. Not much room for upside, but guess what? They were in really good areas and they were really nice, and we were upgrading our asset class. Well, apartment complexes really have been crushed over the past 3 years. Now, we made a ton of mistakes I'm gonna tell you about, but one that we didn't make, or I guess couldn't predict, was what the market was going to do. Over the past 3 years, as you know, interest rates have gone up a ton, and interest rates do affect the value of your apartment complex because they affect your purchasing power, because it costs more money to borrow money if rates go up, which decreases the value of your apartment complexes. Not going to get into it a ton here, but apartment complexes are based on cap rate, which means their value is based on the income that they produce. So if it costs more money to own and operate, and you're not getting as much rent as you thought you were going to get, and you're not getting the occupancy you thought you were going to get, you're in a lot of trouble. And that's exactly where we were and still kind of are. Those 3 apartment complexes that we bought are all valued at pretty much what they were valued at when we bought them, which is not a good investment over 3 years. Our original plan was to buy them, slightly increase rent to market rent, to get more efficient with expenses, and to maintain or increase occupancy. Had we done all 3 of those things, the apartment complexes combined would be worth closer to $18 million, when in reality they're still worth that $12-13 million that we bought them for. So we've literally missed out on a few $1 million worth of equity growth that we would be tapping into to pay back our private lenders now. However, this 3-year plan is going to turn more into a 5 or 6-year plan, because exactly what we didn't want to happen happened. Interest rates went up. Can't really control that. Our occupancy is not where we thought it was going to be. We underwrote the property at 95% occupancy, meaning we expected 95% of the units to be occupied at all time, which would mean a lot of rent coming in, when in reality we've been at about 92% occupancy over the past 3 years. Part of that is management on our part. Part of that is there are a few brand new apartment complexes that got built in the area that are right by our very nice apartment complexes, but someone's going to pick a brand new apartment complex with more amenities over our older rehab apartment complexes with a little less amenities, if you're talking the same amount of rent. And on top of that, we weren't able to raise rents where we thought we were going to because of those new apartment complexes in the area. What it boils down to is our money costs are a little bit more than we thought they were going to be, which reduces income. We are 3 to 4% shy on our occupancy, which reduces income, and we're not able to get as much rent for the occupied units as we initially thought. All three of those things combined mean we've been treading water for the past 3 years on these apartment complexes. We've probably lost about $100,000 each apartment complex over the past 3 years. So not $100,000 in 1 month, of course, but overall probably about $300,000 in losses. Now we are starting to get things together. Rents are starting to come back a little bit. We're getting creative with them and dialing in our multifamily property management, and these things are starting to cash flow, but it took a lot longer than we thought because of the things I just told you. And we have 4 different businesses we're trying to run, and focusing just on the problems with our 3 multifamilies that aren't producing, that are losing a little bit of money every month, got pushed on the back burners because we have an education business that has the potential to make millions of dollars a year. We have a flipping business that flips 300 houses a year. We have a property management business that is onboarding other people in the space and managing their properties, and we want to professionally do that. We just have a lot of balls in the air, and this specific thing got overlooked because it wasn't bleeding enough to hurt us until we looked back and we saw, wow, these things are really, really killing us. So in reality, we lost a few $1,000,000 in potential equity growth, and we've lost about $300,000 in actual cash flow. That's not a good investment. And I think the lesson learned here is don't get too big for your britches. If you follow me at all, you know I don't feel like I am overconfident or cocky, and I don't necessarily think I was when we bought these, but everything we had been doing up to this point was working out. From the flips to the wholesales to the other apartment complexes to the other businesses, we were riding a lot of tailwinds of an overstimulated economy, of a hot real estate market, and we just kind of got caught with our pants down, not in a good way. So it's not the end of the world. Luckily, we have other businesses to help float these things, but if they were our only income source, hopefully we would have done better at managing them, but we would be screwed at the same time if we had not. So the second big mistake sucked, but the third one is even worse. And in case you're wondering, I have a ton more mistakes that I've made that I will get to in future content, so make sure you're subscribed to this channel so you can see about my future mistakes and my future wins and hopefully learn from both. This third mistake was my education businesses, and this was cutting off sales. So I've lost money on real estate deals. I've showed you a few examples in this video, from flips and wholesales and rentals to apartment complexes and self-storage facilities, and a lot of different ways we've lost money. Of course, we've done pretty well at the same time. However, this mistake was a business mistake, not an actual property mistake. So one of my business is FasterFreedom. It's what you're watching me and hearing me on right now. It's my online education brand. Incredible business. I have over 2,200 students inside my community that have paid me to learn from me and my team. I have about 3.5 million followers on social media. We get close to 30 million views a month across all social media platforms. That FasterFreedom brand is incredible, and it is pretty profitable, or can be pretty profitable. For quick context, I created this education brand kind of on accident from posting a little bit on social media and people asking me to coach and teach them. So I created some products and some mentorships and some communities to help people do that. And it was not very profitable at first, but then it quickly grew to a very, very profitable company, like healthy 7-figure type of profit. And we had an outsourced third-party sales team that was getting the sales and getting people inside the community mentorship. We were getting 50 to 75 people every single month, and things were really rocking and rolling. However, we didn't really like the process of having a third-party outsourced sales company doing our sales. There was some lack of transparency, and we just really didn't fully know what was going on the sales side, which is a very outward facing part of a company. Everything was rocking and rolling. This was a couple years ago, so we decided, hey, we're just gonna take sales in-house. So we paid $50,000 to someone to consult and bring sales in-house. We did that in November of 2023. In October of 2023, we made, not net profit, but we gross profited about $400,000 that month. So that meant we owed the sales team a big commission check the following month, which November, the next month, is when we let them go. We owe them about $150,000 in commissions from the previous months, and we had to pay them over the next couple months because there were payment plans and things that we had to fulfill with them. However, we hired the wrong consultant, and sales fell off a cliff. November, we had 8 sales. December, we had 13 sales. So on paper in November, we lost $175,000. When in reality, we were used to making anywhere between $100,000 and $200,000. So that was a $300,000 to $400,000 swing that month in what we were used to making combined with what we lost. The next month we lost 50 grand, and then we started to slowly make money for a few months. Nothing crazy, like 5 grand or 10 grand or 20 grand, just started to make a little bit of money after a few months. But in reality, we lost several $100,000 and a little bit north of $1 million because I didn't hire the right consultant and we didn't have a plan in place to hit the ground running when we let that sales company go. Just lack of transparency and lack of preparation on our part and not fully understanding what it's like to have an actual sales floor in-house. Again, we ended up making a little bit of money and getting out of it, but we never are going to get back all of that money that we lost. On paper, we lost between $250,000 and $300,000 actual out of the account, but there was another several $100,000 that we would have made had we had a better plan, or maybe even just approached this third-party sales company and aired out our grievances a little bit more aggressively and drew a line in the sand to get things fixed and to get them how we wanted them, so that we didn't just automatically stop getting signups, because getting signups can be tough. So that was a huge mistake. We ended up getting another third-party sales company and doing in-house / out-of-house to get us out of this thing, but it was a mess in doing so, and having that much revenue and that much profit come off the books that quickly kind of bottlenecked all of our businesses, because I have 4 businesses. Sometimes they're all very profitable. Most of the time, some are profitable, some aren't really, and then sometimes they all aren't profitable, which is kind of what happens and what's happened actually in the past several months. So we're kind of getting through it, and we're trying to punch our way out of it right now, and we're going to do it. It's just a matter of time. We're just figuring things out, because guess what? We own $50 million in real estate. I have about 50 team members on my team. Everybody on the team makes good money. We do okay, but we're not perfect when it comes to being entrepreneurs and business owners. We scaled quickly, did well, but now we're hitting this wall of getting to the next level, and I think that's natural and normal. As long as you don't give up, you're going to push through. I promise you, everyone you know that you look up to that's made a lot of money, created a lot of wealth, and created a lot of impact has made mistakes just like this. Hopefully not as big, but most likely if there's somebody that's made a ton of money and is at the top of the industry, they've made much bigger mistakes. You're not going to get ahead without failing. Failing is literally a stepping stone on the path to success. You have to be okay with failing, hopefully not failing as grandly as we did, but you have to be okay with failing if you want to have success. It's not a linear path up. It's not an escalator. There are a lot of bumps and bruises that you're going to go through, but if you stick with it, and if you push through, and I'm kind of talking to myself right now, giving myself a pep talk, you will win, because very few people are willing to push through all the ups and downs and sideways and mistakes and stub toes that come along with creating something truly special. And we are on that path. And if you want to follow that path, again, make sure you subscribe, you hit that like button, comment anything in the comment, and I will give you more clarity and feedback, any questions you have about these 3 mistakes or any other mistakes I've made. And make sure you're following me on all social medias, including my podcast, The FasterFreedom Show. Thanks for watching, and I will see you on the next one with hopefully a little bit more fun of stories.